This basics clip is linked to depreciation.
I'm Carsten Berkau, full accounting professor in Osnabrück. My basics clips will help you to understand international bookkeeping.
I cover the case study DODD Limited, which is discussed in chapter 17 of my textbook. The company DODD Limited buys a saw which costs them 120,000 euros, and the date of acquisition is the 3rd of February in 2004. For this case study, no value tax applies. But we have to be aware that the acquisition takes place in February, which means the company can only deploy this saw for 11 months in 2004. From 2005 onwards, it will be 12 months per year. So the annual depreciation will be 120,000 over 5, which gives us 24,000 euros per year. In 2004, the company only uses the saw for 11 months. Accordingly, it has to recognize depreciation to the extent of 22,000 euros in 2004. The standard bookkeeping entry for depreciation is debit entry depreciation, credit entry accumulated depreciation. You actually can make the credit entry in the property, plant and equipment account, but that actually leads to a loss of information which we don't want. In the next accounting period, 2005, the company makes the bookkeeping entry debit entry depreciation accumulated depreciation to the extent of 24,000 euros. In class, depreciation always is calculated accurate to the month. In the case of DODD Limited, the company buys the asset on the 3rd of February. We have to consider that for the February, the majority of the days, the company will be in possession of this saw. For that reason, the February will count for depreciation. Let's assume the company will sell the asset on the 20th of December. In this case, December will count as well, as for the majority of the days, the company is in the possession of the asset. We assume, for example, the company buys the asset on the 20th of February. Now the time the company is in the possession of the asset is the minority of the days. For that reason, the February does not count for depreciation. So depreciation will start in March. So for this example, the depreciation will further assume that the company will sell the asset on the 3rd of December. Now the December does not count, as for the majority of the days the company does not own the asset. Therefore, depreciation will stop in November. For the acquisition of the saw, I make a debit entry in the property, plant and equipment account and I credit cash back. In the case of DODD Limited, we record bookkeeping entry number 2. It is 22,000 euros as a debit entry in depreciation, and a credit entry is recorded in the accumulated depreciation. Now the value of the saw is 98,000. We have to consider the value as recorded on the debit side in the property, plant and equipment account, less the value which is recorded on the credit side of accumulated depreciation. 120,000 less 22,000 gives us 98,000. Companies report about the values of property, plant and equipment on group level by a register of non-current assets. This register of non-current assets is for an airline, Comair, for their fiscal year 2018-2019. The company shows in the lines their items like properties and buildings, leasehold improvement, aircraft and related equipment, and you see the columns cost, which is the cost of acquisition or the cost of revaluation, accumulated depreciation, which always is a negative value as it is a reduction of the cost of acquisition or the cost of revaluation, and as a result the carrying value, which is the cost of acquisition or the cost of revaluation less accumulated depreciation and less accumulated impairment losses. Next, I prepare a register of non-current assets for DODD Limited in 2004. We start with the cost of acquisition. The saw has been acquired at cost of acquisition of 120,000. The accumulated depreciation is recorded as a negative figure. It is here negative 22,000. As you can see, the carrying value is 98,000, which is the value that appears on the balance sheet under property, plant and equipment. This means whenever I have to record property, plant and equipment on the balance sheet, I go to the property, plant and equipment account, click on the 120,000 and then I deduct accumulated depreciation, which is the balancing figure of the accumulated depreciation account. Before I can make the bookkeeping entries for 2005, I have to balance off or to close off all the accounts. The property, plant and equipment account, the cash bank account and accumulated depreciation have been balanced off. In contrast, depreciation has been closed off to the profit and loss account in 2004. In the next accounting period, I define a new account, depreciation 2005. Now I make the bookkeeping entry alpha to the extent of 24,000. I make a debit entry in the expense account and I credit accumulated depreciation. Now we see that the total of accumulated depreciation is 46,000. I adjust the register of the non-current assets. I replace accumulated depreciation by the negative value of the balancing figure in the accumulated depreciation account. Now we see the carrying amount is 74,000. I have to change the accounting period, now it is 2005. If I want to prepare the item property, plant and equipment on the balance sheet, I get two options. Option 1 is I take the amount straight from the register of the non-current assets. The alternative is I just derive the figure from the accounts. For that, I click on the debit side of property, plant and equipment, 120,000, and I deduct the balancing figure of the accumulated depreciation account. As long as we keep property, plant and equipment separate to accumulated depreciation, we keep all the information we need. My recommendation is always make a debit entry in the depreciation account and record the credit entry in accumulated depreciation. That way, you always will be able to prepare a register of non-current asset based on your books. Now that you have seen the video, take the textbook and study the case.